Welcome back to the Money Under the Mattress podcast. My name is Jake, and my co-host is Mitch, and today we'll be answering some Q&A questions. How are you doing today, Mitch?
I'm doing great. Feels a little different that we're just you and I now. No guest on today, and don't believe there'll be a guest on for the next one, which we'll be talking about 13 Fs. But then proceeding, we'll have some more guests on for you guys to enjoy. But no, doing pretty good. I just got off work. How about you?
Not bad. Just got off work a few hours ago. Pretty excited for the podcast.
Exactly. Yeah, we're just gonna do a little Q&A for right now. We got a couple questions just from Twitter and then also on our Instagram. But I guess we can go into the first question. It kind of goes into our day jobs. Do you want to explain what you do for a day job, Jake? Or I'm not sure if you can.
I'll just say that I work at one of the banks in Canada. That's all I'll say. That's all I can say.
Yeah, okay. And then for me, I can't really say either. But I just work for the government. I wish I could go more into detail, but we're both told that we were not supposed to. So, I guess. I'm just thinking what else we can talk about, but we got a few more questions we'll go through for right now. Do you want to talk about your highest conviction bet that you have right now?
The high would it probably be both our highest conviction bets right now, I'd say, eh?
Yeah, I'd say it's pretty well. Yeah.
Well, I guess we're voting with the weighting, right? So right now, me and Mitch both have Alibaba in our portfolios. It's both of our positions are 30%, I believe, if not a little bit more in both of our portfolios. As you know, right now, there's been some stuff going on in the news about Chinese companies. As you know, there was a crackdown on the education sector in China. But Baba is not really a part of that whole sector, so they're good for now. There is some other pending stuff going on with Baba where the government could get a bit dicey on us. But if you kind of look past that, you kind of have a pretty awesome company at a pretty fair price. I would say it's probably my highest conviction. I think it's probably as of right now, probably has the highest upside potential. I wouldn't say it has the lowest downside potential out of all my positions, but the upside, in my opinion, the upside is so great that I'm okay with a bit of a downside. I'm okay with the potential downside. I'd say probably the lowest amount of downside in any position I currently own would probably be
Berkshire.
Berkshire, just because the thing's a fortress financially. But I would also say that Equitable Bank.
Yeah, I would say EQ
would also be pretty low down. Just because I'm able to kind of tell if someone else enters the market and what they're doing in Canada. And then I can kind of judge it off that, where some of the other businesses, there's a couple competitors, like e-commerce, for example, in China, there's multiple competitors. You got JD, you got Pinduoduo, you have all these other tech, giants in China that are gunning for Alibaba. But when it comes to Canadian banks, EQ Bank is, in my opinion, the number one fintech company in Canada. And yeah, once more competition comes along in the fintech game in Canada, then we'll reevaluate.
Yeah, I would say I have two high conviction bets, actually. My highest conviction, obviously, is Alibaba. I think it's pretty evident with my 31 or 2% weighting in it right now. You already talked a little bit about that. There is the extreme upside. I'd say it's not a contrarian take by any means, but hypothetically speaking, I think the potential upside for it within the next 10 years could be a 10x from these numbers. Now, whether or not they're always going to be trading at a discount based that they are Chinese business, there could be risk with VIEs. I think they'll always trade at a discount compared to, even if they do get to be a massive competitor to US companies, such as, technically Google would be a competitor of theirs,
Well,
Amazon.
even if you look at Amazon, right? Like I think it's trading at 50 times earnings right now. I think at one point it was trading at 70 not too long ago. I don't see Alibaba getting up to 70. I could be wrong. And if it does get up to 70, not bad for us, but I doubt it gets up to 70.
No,
I wouldn't be surprised.
I don't believe Alibaba could really trade above 40. I'd be hard pressed.
Well, markets, auction driven markets can be wonky at times, so you never know, right? But as of right now, it's trading in the low 20s, I believe, price earnings. If you take the reported numbers at face value, if you don't do a little bit more digging and look at like exactly where those numbers are coming from, I think its true multiple is a little bit lower than that. They're also plowing a bunch of money or incremental profits back into future investments. So it is decreasing earnings over the next few quarters, if not years. But I think that will benefit them in the future. And
I think the cloud business is what really intrigued me. I think, okay, so they have, if you look at their actual overall business, I guess this turns into an Alibaba discussion now. But if you look at their overall, their Tabio, AliExpress, and then the other big one, just lost my. The other third biggest business that's within Alibaba, Jake.
So what were we saying? Sorry, you were saying something about Taobao?
Yeah, well, there's the three biggest businesses within the
Taobao.
Tmall. Sorry. So you have Tmall, AliExpress, and then Taobao, and I think when people think of Alibaba, they think about those. People don't look at Alibaba and think that this is going to be a cloud business. But when we had durable investments on a few podcasts ago, it kind of made me realize like how big this cloud business could get, and how sustainable it could be in the future. When you have somebody that is intelligent as durable as within the cloud businesses and sort of technically sector, and he's saying that he would not be surprised that the cloud business I'm not sure if it's exactly what he said, but he said like within the next couple of years, he would not be surprised if Amazon's AWS business is the market cap of Amazon currently.
And he also said that the 5 or 6 main competitors right now, he'd be surprised if there was another one added to it. Like there could be, but
he could see one maybe, but he said like after that, he'd be really surprised. And then he said that Alibaba is going to be growing a lot faster than AWS, as they will be taking market share from AWS, but that overall market's going to get bigger.
The Alibaba Cloud, you mean?
Yeah, Alibaba Cloud, sorry.
Yeah.
They're going to be taken away from AWS, I believe, because AWS is around 50%, and he expected it to go and shrink down to about 30%. I could be off on those numbers. But I think he put in a little margin of safety, a little bit on 30%. And he believes Alibaba and Tencent Cloud are going to be chewing away at the behemoth that AWS is and be growing a little faster than AWS currently is, which I predicted, I guess, to a degree, or predict to a degree. But no, there's a
lot of upside. There's a lot of stuff where if you dig deep into the financials and the different segments of different businesses, they have so many different businesses in there, and like a couple of them are still pretty young and new, and you never know like which one could take off, right, and be pretty explosive. So there could be stuff besides the main stuff that we're thinking about.
Yeah, there could be stuff within the next couple of years that Alibaba just comes out with that we don't even have an inclination. It's just they have what Monique McBride talks about all the time is the ability to spawn businesses out of nowheres, right? So similar to a Google or an Amazon, there's not much upfront capital that they need to put into these businesses, and they could take off. What's to say that Alibaba can't be the Google Maps of China? or whatever it may be. Like
They already kind of have that with,
yeah.
yeah.
But no, I mean, even the Chinese YouTube or Freshipo, which are a couple of businesses that could really take off, Jake, you think?
I don't like, to be honest with you, it's too early to tell with some of those other ones, but I think the cloud will be big. That will actually produce, if there's going to be super outsized returns, it's going to come from the cloud, in my opinion.
Yeah.
And see, if let's say e-commerce is the only thing that works out, like out of everything that they have, and that's the only thing that really, which I doubt is going to happen, but let's say worst case, they still give you a pretty good return, in my opinion, growth wise. So it's basically, we're looking at the main parts of the business, and we're saying, like, if these can continue, which we believe they can, then you're going to get like an X amount of return from this, which is a pretty good return. And then if the other stuff come in and they explode as well, it could be some pretty strong returns. Also, I was telling Mitch before jumping on the pod that I might have found another potential position, but I still have some work to do. Still got to do some reading on it. I think we've actually may have mentioned it on our Twitters before a while back. I'm not quite sure.
I know I've talked to a few people about it before. A lot of people would be unfamiliar with it, but the similarities it brings to another business, a lot of people know that business.
Perfect cloner. And the person who is a CEO of the company actually took inspiration out of that business that was very successful.
Yeah.
Anyways, well, we'll talk about that on another episode, but I'm pretty excited about it. And
are you thinking about doing a write-up on it, Jake?
I think it might be my first Substack write-up, although it was either gonna be that or I was gonna do Equitable Bank. I wasn't sure which one I wanted to do.
Which is similar to like a
I
Canadian.
might take the next couple of weeks and do a write-up on that.
And Equitable Bank is similar to like an Alley Financial. Would it be comparable?
I don't really know much about Alley. I've read a little bit about Alley, but I don't.
From what I've heard, it's similar. I mean, it's a fintech.
It is. Well, yeah, but I think they do.
Know.
I believe Alley does auto loans and stuff.
Yeah, so
where really they're similar. Equitable Bank's not really doing auto loans and stuff like that. So it's a little different, but like I guess you could think of it in the same type of way.
It's fintech. Yeah.
I like Canadian banks. Like in general, like Canadian banks. Like obviously I wouldn't put my own money in Canadian banks right now. But I think if you're someone who is maybe a little bit closer to retirement, those can provide some good income sources for you through their dividends and appreciation over their multiple years, in my opinion. But
who's to say? Exactly, yeah. And then the other conviction that I would say I have, really it's honestly it's not that high of a conviction. It's super high upside, but there's also the downside of it. And it's Boston Omaha Corporation. I did write up on it a little while ago. Pretty well a pure jockey play. I mean, at these prices, it would be a jockey play. When Jake and I bought it, it was more of like we're pretty well buying it at one-time book value, about a $14 a share or $16 a share, and the book value was $14 a share. And we just saw great management. We thought there could be some potential upsides. So we're like, okay, we'll make the bet for right now.
Don't lie, Mitch. We thought it's an next Berkshire Hathaway when we first looked at it.
Oh yeah, I mean,
we spent 5 days. We probably already told the story, but we spent 5 days in a coffee shop in our hometown, and every day for like 3 hours, we would just sit in that coffee shop and read their annual letters and their reports.
We'd read when we went home, and then we just talk for 3 hours about like what we see in this business
and the similarities between Berkshire and Boston Omaha. And then, you know what, the more time goes on, the more they're actually acting on it. And they're not just saying that they're like, you know, how sometimes people say like certain things and then their actions don't actually follow their words. Well, their actions have been following their words, in my opinion, so far. So the story's still playing out.
I mean, to begin, right, with their insurance businesses, that they at the start they're like, we're not sure if we're going to make it as an investment vehicle, and then, I mean, if anybody has any idea how how well the insurance business has done for the other Buffett, Warren Buffett, then it's one of
The
those things.
insurance, but the insurance business for them hasn't done very well over the last year or so because of COVID, because there hasn't been as much work being done by people in like construction and stuff on homes.
Contractors, yeah,
because they do a lot of bonds for that and stuff like that. But
it's a pretty simple business to understand. I think there's a lot of things going on within it, but I think the businesses within it are fairly easy to understand. I mean, the broadband business, to a degree.
I'm really excited about the broadband. I'm really excited about some connections between broadband and one of the companies that they're invested in as well. So
DFH,
yeah.
Do you have much ideas about the competitive advantage that broadband has, Jake? Over can Liberty just go in and wipe them out, you think?
I mean, anything's possible.
I mean, anything's possible, but I don't think Liberty wants to, based on the fact that it's not worth it for Liberty to go in.
Well, they are getting into rural areas of Arizona and
Utah.
I believe they're in Utah, around Salt Lake City area almost. I mean,
it's in the rural areas of Salt Lake City, I believe, isn't it? So outer parts.
Yeah, I remember looking at it one time there, and it was in a smaller like city/town. I can't remember exact city name. I thought it was near Salt Lake City, or it might even be in Salt Lake City, but it might have been another name to it. But I do like their billboard business as well. It's not the most flashy business, but it does have some good barriers there with the whole, you're not allowed putting up as many signs as you want. You need to get permits and stuff like that. And there's like a limited amount that you can have out there. You can't just put up random ones wherever you want. So I think that's pretty cool. Only time will tell though. And they're pretty smart people.
Exactly.
Like, they're honest. So can't ask for much more.
No, exactly. What are some things that you've been reading lately? You've been reading Greenblatt's notes, eh?
I read through the whole thing there. I just finished the other day. I thought that was exceptional. Anything that Joel Greenblatt has to say, I recommend. I'm sure lots of other people recommend that too.
I do like his lectures. I know there's a handful of his lectures that are out there, but the one lecture I do really like is I'm not sure it was 2001 or 2002, and it was at Columbia Business School, and they went through Charlie 479 or 479, no 479.
479, yeah.
Which is Norbert Liu from Punch Card Investments. They went through a few of his VIC write-ups, and that's just an exceptional video.
Just a second there. I'm gonna.
Another thing that I've been reading lately is I've been reading up more on, what was his name, Jake, from Arlington.
Guy retired there. It's bad. I read that too. I should know his name.
Yeah,
he's great. He's a great investor. Actually, he had some really high returns. Just a second here. I got it right here.
Alan Meacham.
Yeah, that's his name.
Yeah. Alan Meacham. Since like you talked to me about it, and then Since Poppy was the one that actually kind of recommended it to me, and I was like, okay, so two of the guys I respect have read it, so I'm gonna read up on Alan Meacham, and he was a crazy man. Just the fact that
leveraging
up, the fact that he had to retire because his doctor said that his stress levels were too high. I mean, he was a quality manager.
Yeah, 100%. Have you read Michael Burry's like limited amount of letters out there? Have you read them?
I've read a few. I know.
It's interesting. He had a pretty he always has pretty variant views on things, but a few books I've been reading. Well, I just finished Class Notes. I'm still reading a few 10Ks there. But a couple books I started was Beat the Dealer by Ed Thorpe. I just started that. I actually read the first chapter. And it's talking about like blackjack and how like you beat the system, that beat the casino. So far it's a pretty good book. It's kind of a different read because I'm used to reading like business and investment books. So it's always good to change up genres and topics. I also just started about 2 chapters into Adam Mead's book, The Complete Financial History of Berkshire Hathaway. So far, it's a pretty solid read. It's a pretty big book, though. It's like 700-800 pages.
It's a fast read.
Is it?
I think like over a couple of days, like I pretty well went through almost the whole book within a couple of days. It might have been a weekend. I might have read through the first time. I've read it twice now. Well, technically almost twice. Just finishing up in the last few pages, but no, I mean,
I find it pretty interesting how he talks about like Berkshire Hathaway before Buffett, like the history of it and how it kind of got basically wiped out by the South and other country there. I think it was Asia that wiped him out as well. Berkshire out.
But, and they talk about how Berkshire and then Hathaway kind of collided,
came together. Yeah, it's a pretty cool book there.
No, it's a really good book. And I mean, the quote that Monish Babrai, I think he wrote something on like the front flap of it, and he said like it's a must for anybody. It might have been Guy Spear that wrote it, but it's a must for anybody, any Berkshire.
Well, I think it's Chris Bloomshin does like the forward, I think, right?
Yeah. I mean, he's between him and Adam Mead writing a book. I think pretty well you could just I think they could quote Buffett out of anywheres.
Yeah, no, like those guys know what they're doing there with Buffett. Any other books you've been reading lately?
I've been reading, like I've been listening to a lot more earnings reports and earnings calls. I mean, I got the itch for Spotify. I know Sleepwell Capital hit me up, and he said tweeted me or something like that, and he said like I was asking him for ideas on Spotify and like where I can go find some more information, and he just said like have fun for the hunt, and it's a really good business. I really like Spotify, something that's in my circle of confidence. So I've been reading up a lot about that. Spotify's executives have podcasts on Spotify, so I mean, there's not much more you can ask for. So between the earnings calls and the podcasts, it's been great. But I guess speaking about earnings calls, we could probably go into our sponsor for today, which is Quartr. Quartr is a new way of doing company research. Their first mission is to enable access to conference calls, investor presentations, transcripts, and earnings reports as frictionless as possible straight to your pocket. Their second mission is to create a completely new way for company research to reach their investors and vice versa, to change the way people look at investor relations. Their initial core product is now available for both iOS and Android, but stay tuned for additional features during the coming year. What have you been listening to, Jake, lately?
2 quarter calls I've listened to lately were Equitable Bank and as well Alibaba. Can't recommend the app enough though. Like pretty well anything you need to find on there for like a company that has done a shareholders meeting or earnings call, it's on there. It's perfect. It's super easy to get. Like I can't recommend it enough.
Yeah. Quartr is 100% free. They include companies from 15 markets today and plan to add more during the year. Which I believe that they have added a little more as I've seen on the app the last couple.
Seems like it, yeah.
Yeah, that's what it seems like. They prioritize requested companies, which can be easily done in the app, which I've talked about before. I mean, anytime that I've ever requested a company, it's been within a couple hours almost that I was able to get an email back saying, yeah, the company that you're looking for is now on Quartr. They have a lot more in store for the back half of the year. So make sure you go and follow them on Twitter, just at Quartr_app. And that's at QUARTR_APP. Again, that's at QUARTR_APP. Yeah. So going back and talking about, I guess we could probably move on to the next question to a degree. Do you want to discuss how your strategy over time has changed?
To be honest with you, I think my strategy changes every day. Every day I'm learning something new.
Yeah.
See something on Twitter, see something from a YouTube video of Manish Pabrai, or just any like super investor or anything relevant to value investing or anything like that. Like every day I'm just implementing something new, taking something out. I mean, kind of the key thing to do is to figure out what something's worth and then pay a lot less for it. I mean, that's still the key thing here, but the way you figure out if something's worth more than it's showing up on the ticker is, you can learn different things from different people, and that'll help you along the way. I think though, like especially you were more into the, below book.
I was into the deep value one.
Super deep value. Yeah.
It wasn't super deep value, but it was getting close to it. I mean, I've always looked at every time that when I was a kid, I was always looking for deals, whether it be on Kijiji, which is like the Canadian version of like, was it like Angie's List, or I don't even know what those are called anymore, but it's a Facebook marketplace, just an online marketplace.
Well, it's also easy there, right? For like it kind of draws you in there because you're like, oh, this is easy. Like things selling at half times book.
Yeah, exactly.
Little do you know, the return on equity is awful, or they don't even have a return because they have no net income or anything, right? So
yeah, and so starting off, I thought it was a lot easier to look at than to predict the quality of the business, or not predict, but be able to understand the management and kind of we're still valuing the business, but we're more focused on the actual quality and qualitative parts than the actual quantitative parts, or metrics, I guess, to a degree. But yeah, starting out, I was looking for easy to understand businesses that were selling at like almost less than half off. I was looking at businesses like, I mean, some of the businesses I bought one that was like, I'd say it was worth 20. It was 20 selling for 20% of its actual assets. It was a commercial real estate lender. So I mean, like when that's one of your first businesses that you buy, then it was just like I knew something was kind of wrong. I mean, it came out right, and I mean, I did not bad on the stock, obviously.
Just doubled it, not terrible.
But I mean, it's what I quickly realized is that when you're doing nets, I mean, it's pretty hard to find net nowadays, especially on, I mean, the Canadian or American. But when you're doing nets now, it's like you're going to be doing, as soon as it hits the double, or if it goes up by half, like 50%, then you're going to have to go and take that capital out and then put it somewhere else, right? So compared to where an Alibaba could double tomorrow, I'm not going to take out any money, right? So when you have good management in place where it's actually returning its capital at a great amount or great percent per year, I mean, there's nothing much more you could really ask for, even if you can pay up a little bit for it. That was kind of a hurdle that I had troubles with, was paying up a little bit for quality. Still am, but I'm kind of getting over it as I read up more stuff on like Nick Sleep, Charlie Munger, Adam Meacham, kind of those guys. And paying up for quality is always better than trying to slip by through life just buying dog shit.
Well, like, how you mentioned about the buying the, nets and the low price of book, and, waiting for it to, re-rate upwards. The thing is with that is if it's not in a registered account, or at least in Canada, like a TFSA and RSP, then you have to pay taxes on it, where you could just you can compound, your money within a, long-term compounder and not have to pay any taxes, which is pretty nice.
Yeah. I mean, how long would I have owned that business for, that real estate business? Maybe
4 months.
Okay,
4 months at most. Yeah.
4 months at most, hit the double. And I was like, okay, I'm out. There's nothing else it's going to do. I mean, it could have maybe went to a triple. I haven't checked on it lately, but It could have tripled. It's not worth 100% of what it's actually selling for. It's a junk business. I mean, it was a better business than most nets that I've seen and heard of. I mean, you go in like net screeners and stuff like that, and these things are like look like Ponzi schemes. But no, it was one of those things that as soon as I got out of that, I was like, okay, I'm gonna look for some quality businesses, and found EQ Bank. Found that was a quality business, quality management. I was happy putting some of that capital or all the capital from the net into EQ Bank.
Can't believe like when we found it, it was trading at like, like 4 times earnings.
Yeah.
And like
4 times current.
I put a decent amount into EQ Bank, and like I'm still mad I didn't put more in. Like I should have put a lot more in EQ Bank, because we've seen how good of a business it was, and we've seen how good it is for society in general, and how cheap it was at the time, right? Like it's I think over the next 5 to 10 years it'll do pretty well.
Another thing we can discuss today, I've been hit up about it a couple of times, because when we talked about it in one of our first podcasts was our startup businesses when we were in college. Do you want to discuss a little bit about those, Jake?
Which ones?
We can talk about like we're buying things off online and selling them on Facebook Marketplace.
You want to start?
Okay, so back in college, this would probably be like a 10, 15 minute segment. So you probably skip through this if you're not interested in learning about our businesses that we started up and how we made a couple grand. But if so, it could be a funny story. But yeah, so when we were in college 2 years ago, how did we start? What was our first business? Was it Sports Picks, or was it?
It was Sports Picks was the first.
Okay, so we'll go with the first one. Okay, so when I'm just telling somebody the story the other day, actually, but yeah, when Jake and I first got into college, we took business, and so obviously, word gets around. People are talking about stocks. They're talking about making passive income. That's a big word that was around, kind of thrown around. And we thought, okay, well, passive income. Jake and I were both in mutual funds. We've learned a little bit through investing, but we're like, there's not much money we can make through mutual funds. We didn't really think about it that much at the point. But we thought that some fast money we could do is gambling on sports. Jake and I were both like played hockey growing up. Jake played football. Both of us played lacrosse. So we understood sports to a degree. We thought we might have an upper hand over some people.
We weren't bad. We
weren't bad. I mean, I haven't gambled on sports, I don't think.
No.
Probably this year yet. But no, I mean, we enjoyed sports, and we thought, you know what, we'll see if we can make a little bit of money off that. So at the start, we were doing not half bad, and then we kind of went to a slump. And when we were in the slump, Jake and I were both like, okay, well, how are we going to be able to get out of the slump? We do have half decent picks, but we're just where we live, it's illegal to do anything but a parlay. So you have to do a parlay. You couldn't do individual picks.
Now they're changing that, actually.
Now they're changing. Yeah,
I seen that. I think it's 27th of September. I think it was, or August. They're changing it.
Yeah, so I know it's soon.
Yeah.
But yeah. So what we were doing was we were parlaying. So for anybody that doesn't understand gambling, it means that you have to pick more than one game for that night. So then, like, let's say you pick 2 games, one wins, one doesn't, then you lose out on that bet. And so what me and Jake were doing is like we do like maybe 3 or 4 game parlays, and we'd win on the majority of them, but then lose on just like one. And so over in the States, they're doing like single bets, especially online, like there's single bets online. And so we're like, okay, well, we can make our picks of the ones that we have the highest conviction on, and we can sell our ideas. And so
tell them how we got the inspiration, though.
You talk about it.
Yeah. So I was watching a documentary, and kind of like a documentary, I guess you call it documentary, on
The
Vegas
documentaries that
State.
it's like the documentaries that you see on like YouTube type thing, right?
No, like it
Uh,
was. I think it was. I can't remember if it was from HBO or like it was something. No, I don't think it was HBO, but it was something like that, like some type
okay.
of network or whatever. Anyways, and it was on Vegas Dave, and Vegas Dave would be selling his picks of sporting events for gambling. And like he'd be selling the picks for like $5,000 or whatever it was. Like, they called them like whale picks or whatever it was at the
5,000 or
time.
500, I forget now, but it's like 500 per night or 5,000 per night.
And he'd have like he'd be doing all from like social media. He'd be kind of like marketing it out to people, like, you know what I mean? And he it kind of like got me thinking. I'm like, well, it's kind of greasy, but like at the same time, you're kind of just providing a service at the same, you know what I mean? Like you're providing a service for it'd be no different than giving your, well, not investment advice, but it'd be no different than
To a degree,
giving someone,
it's like
what,
those
what
like
would be kind of like,
for the people that are day trading. If
it'd be
they
no
had
different giving advice for anyone and having someone pay for it. Like if you, let's say you were really good at something,
you went to a counselor and they wanted marriage advice, and then you had marriage
or
advice.
even if you're really good at starting businesses and someone came to you and you're like, can I pay you like hourly for you give me some advice on how to start a business?
Yeah.
The same thing as that, except you're doing it with sports gambling. And sports gambling isn't the best thing in the world.
No, it's got that people shun an eye definitely to sports gambling and gambling in general, because people usually have a sour taste in their mouth when they hear that word. But Jake and I, since we were putting our money where our mouth was, we didn't feel that it was too bad. Obviously now we've got note of it since. But yeah, so we found, Jake talked about Vegas Dave to me, and I was like, okay, we'll follow this guy and see exactly how he's doing it. So in other words, what we did was we just cloned Vegas Dave, not on his picks, but just in the way that he not really, the way that he structured the picks to a degree, and then a few other people that we structured and we talked to and conversed within chats.
We got the original idea off him, but at the same time we did it our own way. So it was kind of like cloning before we knew what cloning was.
Yeah. And so what we did was we ran that for a little while, made some decent money off it, and then we're like, okay, well, we just we actually did pretty well, like for the picks for our clients. But then when we realized we're no experts at this, and what happens when it does go to zero, then just people that are like our customers are just going to go to zero with us. So we're like, we don't feel comfortable with that at all. We just ethically and morally, it just was not something that we're interested in.
We were good at single picks, but parlays are really, really hard to hit, especially when you have like 4 games. But for single games, especially NFL, we were actually NFL. Our hit rate was like, if we picked 7 single games, or if we picked 10 single games, we get 6 or 7 of them right. So we would kind of give them our. We won't go into how we actually structured it, but
we just had our highest conviction bets, and we just gave them the highest conviction bets that we do have that night. But no, we got out of it. It was ethically, it was still correct. Like, it wasn't a legal thing at all by any means. But then we thought we didn't have enough conviction in ourselves and confidence that we should be the ones that are, in other words, telling people how to spend their money. So we said, yeah, we'll stop this, and their subscriptions ended, and then we're like, okay, we'll be done this. But no, we had happy customers. So that was our first business, and then we moved into
Facebook Marketplace.
We're half decent at selling our ideas, so why don't we just go and see if we can sell a product? So what we do is we'd get things from Alibaba or Amazon, whatever it may be, and all it was is that you're buying a product and selling it on a different platform.
But you're buying in bulk.
But you're buying in bulk, right? So you're going to get a deal. So we sold multiple things, like we sold electronics and stuff like that, or fitness devices and all that jazz. Bought it off Alibaba for, I don't know, for an example, might have bought something for $5, and then Facebook Marketplace and delivered it to people for $25 or $30. So that ran pretty good. We had pretty happy customers. I don't think we might have had like one complaint. And then what we thought was like, okay, well, we're making decent money, but like we can't really like I mean, we can't size this by any means unless
Can't scale it whatsoever.
you can't scale it at all. Even if you hire somebody out, it wouldn't be worth it.
And we also noticed that people were catching on to what we were doing, and people started doing it as well. So we got competitors, and we had no competitive advantage. It was basically,
it was price. That's all it was.
It was a commodity business. Once you found out who the supplier was coming from, like China or somewhere like that,
once you get a hold of
it was basically a commodity business after a while. But at the start, it was good. It's kind of like capitalism, the way they talk about it. If you don't have a competitive advantage, eventually it's all comes to, like, every business will revert back to the mean. It's the same thing, except on Facebook Marketplace in a smaller city and town.
No, Jake and I found that we learned a lot from these businesses. Helped a lot, just like with our interest in business in general, and then it turned into an investing ideas and whatever it may be. Definitely buying off Alibaba and being an Alibaba customer. Kind of, I was like, okay, well, I mean, we got a half decent product. It came to us in a decent time span coming from China. So it's one of those things that you want to make sure that it is a good product that is coming from there. I mean, Alibaba has been cracking down on the
fake
stuff. So whatever, maybe if it's fake AirPods or if it's fake Louis Vuitton bags, they've been cracking down there, I know. So that was the only thing that I think I had a kind of like a sour taste in my mouth, is that I knew that AliExpress was known for selling some fake items, but they're cracking down on it. We'll see if they don't change that, then I think it will. I mean, I have seen that they've changed it to a degree. They've started on it. If they don't almost go to zero, kind of where Amazon, I mean, Amazon also sells fake products too.
They'll never go to zero though. It's too hard to track. There's too many people that are.
But I mean zero is in, like, let's say under 1% or 2% of the items that are sold are fake, or counterfeit, I guess you say.
Like, maybe technology will do that someday, but it's so hard. Like, it's still years away. Yeah.
And then our third business kind of just went off. It was during our Alibaba business. And what we did is we found this website that was selling, like, well, I'm not sure if it was Black Friday or what it was, but it was some type of like crazy deal for sneakers and
right before the spring.
Yeah, it was right before spring. So
like February, maybe.
I don't know. Yeah, I'm not sure exactly what it could have been Boxing Day.
I don't remember now. It was so long.
I'm not sure, but there was some type of like crazy deal where we were able to buy, like, if you bought like a bunch, then you just got like really good deals. So Jake and I bought like maybe 20 or 30, maybe a little more, 30 pairs of men's shoes,
ranging from like dress shoes to like casual shoes.
Yeah, and we were buying and selling those.
We were actually going to buy them. We're buying a bunch of dress shoes, like, really cheap, because prom is right around the corner. And then, so like what happened is prom, like where we're from, COVID hit and prom was all canceled.
Yeah.
So we had it took us a little longer to sell all the shoes. So eventually we did sell them, but it took a little longer than we expected.
Yeah. I think we still made a profit, but it's just like a pain in the butt for us, because when you're traveling to go drop off or do a delivery for items, and you're not making much money off the commission, it's, especially when you're trying to read up on investments and stuff like that, that's really not worth it. And so that's pretty well the reason, as well as you can't scale it. And I think the fashion industry was a tough one for us, based on the fact that, if we have a size 9 in these like brown leather shoes, and the guy we go to buy or goes to buy it is a size 10, he's not gonna be able to
remember
fit
that
it.
happened, actually.
It's
we showed up in the parking lot one time, the guy put the shoe on, it was just one size too small.
Yeah. And so, live and you learn, but we learned that we're not really interested in the fashion industry. And then we kind of went back into like the whole passive income idea, and we thought, okay, what's the most ethical way of doing of investing or gambling or whatever it may be, with low downside. And then we came across value investing. That's where we are. I guess value investing went into fundamental analysis. You go, Jake.
Before that, though, we were reading some some real estate investing books, but then we figured out that real estate investing wasn't for us. We'll just put it that way.
Especially right now, just at these prices, it wasn't really for us. Especially, I mean, when you're in college, it's pretty difficult to put up all that capital.
Hard to get loans in college too for properties.
Yeah. So we just thought like, and the upside in real estate, I think there is a little bit more upside right now. I mean, obviously there's more upside on some real estate properties, but the overall market that we had where we're from in Canada is just wasn't great. And we thought that we'd be able to do a little better if we kind of stayed put and just invested in stocks. And came across value investing, Jake did, and then kind of got me onto the wagon, and then that's where we are now.
It's worked out pretty good so far.
Yeah. So I guess that's it for today's podcast. I don't want to go too overboard for anybody that's listening. Next week we're doing a 13F podcast. So it's the 4 Christmases. The 4 Christmases. This is the third one for the year. So it's gonna be an exciting time. We're excited.
Second one, isn't it?
Is it the second one? I thought there was one in February, one in.
Yeah. So what happens is, remember, it's a month and a half after June 30th or whatever.
Yeah. So technically it's the second one of the year. But no, it's gonna be an exciting time. Guy Spears already come out, and Tom Russo just came out today. Was it? I believe this morning.
Yep, today.
And so it's I'll be excited for a lot of guys. Monish Bry, obviously, Norbert Lou. So
Warren,
stay tuned for that one. And yeah, Warren's gonna be an interesting one too. Jake and I will be on the buzzer for that, and we should upload as soon as possible. And then also on that podcast, we'll be doing the giveaway for our 100 subscriber giveaway. So if anybody wants to enter, you can still enter. You have up until Monday to do it. So that's August 16th. All you have to do to enter is subscribe to us and then just comment down below on one of our videos, and we'll see it. And if we like it, then you're definitely entered. The giveaway is for the book 100 Baggers. Do you have it on you, Jake? 100 Baggers?
Somewhere's down there. Okay. Do you have it on you or no?
Yeah, I can go get it.
Yeah, I don't. Mine's underneath a bunch of books there.
Yeah, so for anybody that doesn't know what 100 Baggers is, it's a book by Chris Mayer. 100 Baggers talks about 100 to 1 in stock market. We'll send you out a brand new copy. We'll send it through Amazon. So to our 100 subscribers, I'd like to thank everybody that has subscribed and continues to subscribe and like our videos and comment on them. And that's words, Jake.
No, I'd like to thank you guys for listening today. It's a pretty fun time.
Yeah. Awesome. Well, thank you very much, and hope you guys come back for another one. Thank you for listening to this episode of Money Under the Mattress. If you have any questions about this episode, you can email us at moneyunderthemattress.podcast@gmail.com. Everything discussed in this podcast is our opinion and should not be used as investment advice. This podcast is for your entertainment and education purposes only, and we hope that you enjoyed it.